Welcome to the Opening Bell Report.
299%.
Yeah, that is, it's a number that really demands you stop scrolling, doesn't it?
It absolutely does. I mean, we look at growth figures all the time on this show. We are used to seeing, 10%, maybe 20% if a company's having just a banner year.
Right, a really solid year.
Yeah. But when I opened up the analysis report for today's deep dive and saw 299% year-over-year revenue growth, I genuinely thought I needed to clean my glasses.
It looks like a typo.
Exactly. It looks like someone's finger just slipped on the number pad.
Yeah.
But it's not a typo, and that is exactly why we are here. Today we are unpacking the story of the ABTS Group, ticker symbol ABTS.
Which is a microcap stock.
Right, a microcap stock that has suddenly just posted these explosive numbers. And my mission today for this deep dive is simple. I want to know how. I mean, is this magic? Is it a fluke? Did they just have the best sales team in the world suddenly wake up one morning and decide to triple the company's size?
Well, I can tell you it is definitely not just a good sales quarter. If we're being honest, when you see a number like 299%, it usually indicates a fundamental shift in identity. You don't get there by just selling a little bit more of the same old thing.
You have to change the game entirely.
You get there by changing the game entirely, yes.
So we are looking at a real transformation story today.
A radical one. The mission for this deep dive is to really break down the mechanics behind this top-line surge. We need to understand how a company pulls this off, but we also need to, and this is crucial, I think, to look at the risks hiding behind that massive percentage sign.
Because, as we often say, revenue is vanity.
And profit is sanity.
Precisely. Yeah. Okay, let's unpack this. Because I think for a lot of you listening, ABTS Group might not be a household name. We aren't talking about Apple or Tesla here.
No, definitely not. We are firmly in microcap territory. This is sort of the Wild West of the market.
So let's set the baseline. 299% sounds great, but percentages can be tricky. I mean, if I made $1 last year and $3 this year, I'm technically a growth genius, but I still can't even buy a cup of coffee. What are we talking about in actual dollars?
Context is everything. So let's look at the raw data from the analysis report. We're looking at a comparison between their previous state and their current state. Previously, the company was sitting at what the report calls a sluggish $1.68 million in annual revenue.
Okay, $1.68 million. For a publicly traded company, that is dangerously close to zero. I mean, there are local coffee shops that pull in more than that.
It's very small. It's a company that is just barely keeping the lights on. But then you fast forward to the current reporting period, and that number has jumped to $6.71 million.
Wow. From under 2 million to nearly 7 million.
That is the jump, yeah.
That is a complete transformation. I mean, imagine running a small business and suddenly your income triples and then some in a single year.
Yes.
That changes everything about how you operate.
It changes the entire DNA of the organization.
It does.
And the analysis report really highlights that this magnitude of a jump going from that sluggish state to this kind of hyper growth is what makes this case study so interesting. It's not just growth in the traditional sense. It's an explosion.
But here is the mystery for me. You mentioned earlier that you don't get this kind of growth by just selling more of the same product. If I'm selling lemonade, I can't just suddenly sell 300% more lemonade overnight unless I open like 50 new stands.
Right.
So something drastic must have happened here.
Something very drastic happened. And to understand it, we actually have to look at the history of the company. Because if you looked at this ticker symbol a few years ago, you wouldn't have found a Bitcoin miner.
Wait, what would I have found?
You would have found a company called Moxion.
Moxion, okay, that sounds vague.
Yeah, and Moxion was an internet media and marketing agency.
A marketing agency?
Yes.
Okay, hold on. That feels incredibly disconnected from what we are seeing now. A marketing agency is about people, pitches, creatives, ad buys.
Exactly. But here is the key, and the analysis report is very blunt about this. That legacy business was heavily distressed.
Distressed how? Like just losing clients?
Worse than that. Revenues were shrinking. Growth was totally stagnating. It was, for all intents and purposes, a dormant business. They were trying to swim upstream in a market digital advertising that is utterly dominated by giants like Google and Facebook.
And they just weren't winning.
They weren't.
So you have a company that is basically flatlining. They are stuck in this marketing agency model that just isn't working. The revenue is shrinking down to that 1.6 million mark. That sounds like a company that is about to fold.
It often is. Usually this is the part of the story where we talk about bankruptcy or maybe a buyout for pennies on the dollar, but this is where the story takes a sharp left turn.
Okay.
Management made a decision, and it wasn't a subtle tweak. They didn't say, let's just try a new ad campaign or let's hire a new sales VP.
What do they do?
They executed a crypto pivot.
A crypto pivot?
A complete identity change. They abandoned the old model, that distressed media agency model, and dove headfirst into Bitcoin mining in the United States.
Wow. Okay, pause there. That is not a pivot. That is a completely different sport. That's like, I don't know, that's like a bakery deciding, you know what, pastries aren't selling. We're going to become a data center.
That is actually a pretty accurate analogy. It sounds absurd on the surface, doesn't it?
It sounds desperate.
Well, it is desperate, but it's also a calculation. It is changing careers overnight to save your livelihood. They looked at the assets they had, which is mostly just a public listing and some access to capital, and decided that the best way to save the company was to stop being a media agency and start being a miner.
So this 299% growth we are seeing, this isn't the marketing agency suddenly getting better at marketing.
Not even a little bit.
This is a totally new business just masking itself under the same ticker symbol.
Exactly. The report says the 299% growth is the direct mathematical result of comparing a dying ad business to a fully operational crypto mining fleet.
That is fascinating. It's like comparing apples to, well, not even oranges, apples to spaceships.
Right. And that's exactly why the percentage is so high. You are comparing a very low baseline, that dormant business, to a rush of new revenue from a completely different source.
So let's talk about that new source, because this is the mechanics part of the equation. They decide to mine Bitcoin. What does that actually look like operationally? Do they just download some software on an old laptop?
No, this is industrial scale. The analysis report details that they fired up self-owned mining operations. Specifically, they note the facilities are located in places like Tennessee.
Tennessee, okay. I guess that makes sense. You need cheap power, you need a lot of space.
Exactly. Tennessee has very good industrial power rates. And the phrasing the analysis uses is really evocative here. It says they flipped a switch on a brand new revenue stream.
Flipped a switch. I like that image.
It implies immediacy, doesn't it?
It does. It sounds instantaneous.
And in terms of revenue recognition, it kind of is. Think about the old business. When you are a marketing agency, you have to pitch clients, sign contracts, do the work, and then wait to get paid.
Right. It's a long cycle.
We call it the cash conversion cycle. It can take months to actually see a dollar.
I know that cycle well. Chasing invoices is a full-time job.
But with Bitcoin mining, once those machines in Tennessee are plugged in and hashing, that is, solving those cryptographic problems, the rewards start flowing.
The Bitcoin just drops right into the wallet.
Essentially, yes. The network pays you. There is no invoicing. There is no net 30 payment term. The mining rewards replace the lost ad revenue almost immediately. That's the core mechanics of the surge. They turned on the machines, and the revenue line on the chart just shot up.
It really does sound like a rescue mission. They were sinking, and they jumped onto a completely different boat.
A speedboat, apparently.
A speedboat, fueled by crypto. But this brings me to the investor side of things. We have listeners who might be thinking, okay, 299% growth is great, but why should I care about this specific pivot? What is the bull case here? Why would an investor look at ABTS instead of just, buying Bitcoin directly?
The report highlights two main takeaways for the growth investor. The first is what we just touched on, immediate impact.
Right.
Investors love validation. If a company says, hey, we are going to pivot, and then 3 quarters later nothing has changed, investors bail. Talk is cheap. But here, the new model proved itself right out of the gate. It generated millions in fresh, measurable revenue immediately.
So it wasn't just a promise. They said they would do it. They plugged in the machines, and the money actually showed up.
Correct. It validated the decision to pivot. But the second takeaway is perhaps more interesting for the broader market. It's the concept of indirect exposure.
Indirect exposure. Break that down for us.
Well, not everyone wants to go through the hassle of setting up a crypto wallet, managing private keys, and buying Bitcoin directly on an exchange. It can be intimidating.
Or just risky. I mean, if you lose your password or get hacked, you lose your money. There is no customer service 1-800 number for Bitcoin.
Exactly. It's a bearer asset. If you lose it, it's gone. But stock market investors are very comfortable buying shares. It sits right there in your brokerage account. It's insured against broker failure. So ABTS Group becomes a leveraged, indirect play on the crypto market.
I want to stick on that word leverage for a second. How exactly is it leveraged?
Think about the math. Their revenue comes from mining Bitcoin. So their fortunes are mathematically tied to the price of the world's largest cryptocurrency.
So if Bitcoin goes up,
the value of the rewards they are mining increases. Their revenue increases.
And presumably, the stock price follows.
That is the theory. But the leverage comes in because their costs, the cost of the machine, the lease on the building, are mostly fixed. So if Bitcoin prices double, their costs don't double. Their profit margin expands massively.
Ah, I see. So the stock can go up faster than the coin itself in a bull market.
That's the hope. Buying ABTS is a way for a stock market investor to bet on crypto without actually buying the coins. You are betting on the company that mines the coins.
It's the old picks and shovel strategy, but in the digital age. Instead of buying the gold, you buy the gold mine.
Or in this case, the server farm in Tennessee.
Right. And I can see the appeal. It feels cleaner in a way for a traditional investor. It fits right into your 401k.
It does. And when you see that 299% growth, it screams that the strategy is working. The revenue is there.
But, and there is always a but on this show.
Always.
We can't just look at the top line. We can't just look at revenue. Because I can sell dollar bills for 50 cents all day long and have huge revenue, but I'm going to go broke pretty fast.
That is the perfect transition to the reality check. The analysis report is very clear that we need to keep our feet on the ground here.
So what's the catch? Is this pure profit?
Definitely not. The report warns us to look at the cost of business. Bitcoin mining is not cheap. It's actually one of the most brutally competitive industries on Earth.
I assume the computers, the rigs, are expensive.
Incredibly capital intensive. You have to buy the mining rigs, which can cost thousands of dollars each, and you need thousands of them to be competitive. That is a huge upfront capital expenditure.
Okay, so you spend a fortune buying the machines. That's a sunk cost. But once you have them, it's just free money.
If only. No, that's when the real pain starts. Then you have the utility bills.
The electricity.
Yes. The report describes the utility bills as massive. These machines run 247 crunching complex math problems. They generate heat. They need cooling. The energy consumption is enormous.
So we have this massive 299% jump in revenue. That's the top line.
Right. That's the money coming in the door.
But simultaneously, money is shoveling out the back door to pay the electric company and the hardware suppliers.
Exactly. And that is the crucial distinction for you listening. ABTS has a rush of new revenue, but they are spending heavily to keep those machines running.
So the real challenge is?
The challenge is translating that top-line growth into actual bottom-line net profit. It's one thing to bring in $6.71 million. It's another thing entirely to have money left over after you pay the Tennessee Power Grid.
And the report mentions that they are working hard to translate that revenue into profit, which implies they aren't fully there yet.
It implies it's an ongoing process, and it implies that the margins are tight. You are constantly fighting against the difficulty of the network and the price of electricity.
And that leads to the risk profile. This is a microcap stock. It is small. It is undergoing a massive transition. The report classifies it as highly volatile.
Volatile is a polite word for roller coaster.
It really is.
This is a high-risk turnaround story. It is driven by momentum. When Bitcoin is up and the machines are running, it looks great. But if Bitcoin crashes or energy prices spike,
the math changes.
The math changes very quickly. It is not a stable blue chip investment where you park your money for 30 years and forget about it.
It's not a set it and forget it stock.
No, it's a watch it like a hawk stock.
It's interesting because in the old business, the ad agency, the risk was human. Did we lose the creative director? Did the client hate the pitch? In this new business, the risk is structural and global.
That's a great point. They traded human risk for commodity risk.
So let's zoom out for a second. We have covered the numbers, the pivot, the mechanics, and the risks. When you look at this entire picture, from a distressed ad agency to a booming crypto miner, what stands out to you the most?
For me, it's the audacity of the pivot. It's rare to see a company completely reinvent itself so successfully in such a short time frame. Usually companies die a slow death, they try to cut costs, they shrink, they just sort of fade away.
Right, they rearrange the deck chairs on the Titanic.
Exactly. But Abbott's group identified that their old world was dying, and they didn't just try to patch the leaks, they abandoned the ship and boarded a completely new vessel.
It is bold. It's survival of the fittest, really.
It is. But it's also a reminder that in the microcap world, growth can mean very different things. Sometimes it means selling more widgets. Sometimes, like with ABTS, it means becoming a completely different company.
And that 299% is the scorecard of that change.
Exactly. It validates the move, but it doesn't guarantee the long-term future. That depends on execution, cost management, and frankly, the price of Bitcoin.
Which is something they can't control.
Because no one can.
That is the wild card.
Always.
Well, this has been a fascinating look under the hood of a headline-grabbing number. It's a great reminder that when you see a statistic like 299% growth, you owe it to yourself to really look and see where that growth is actually coming from.
Always do the deep dive, never just read the headline.
So just to recap for everyone listening, we started with the headline, Abbott's Group, ABTS, a 299% revenue explosion.
We found out that this wasn't organic growth of an old business. It was a distressed media agency called Moxion that transformed into a US-based Bitcoin miner.
They took their revenue from a sluggish $1.68 million to an impressive $6.71 million, essentially by flipping a switch on mining rigs in Tennessee.
And while that created immediate value and gave investors a way to play the crypto market indirectly, we have to remember the costs. Mining is capital intensive. High revenue does not automatically equal high profit, especially when you have massive utility bills to pay.
And that leaves us with the final thought. We always like to leave you with something to chew on, something that maybe wasn't explicitly in the report but comes out of this conversation.
And for me, it connects back to that idea of control.
How so?
Think about it. When a company ties its entire revenue stream to a volatile asset like Bitcoin, they aren't just pivoting their business model. They are effectively outsourcing their stability to the crypto market.
That is a powerful way to put it. They are no longer just dependent on their own sales team. They are dependent on the global crypto market.
Exactly. So the question is that a stroke of genius for a distressed company that had no other options? Is it the ultimate survival tactic? Or is it just a different kind of gambling?
Are they business geniuses? Or are they just sitting at a different table in the casino?
That is the question you as an investor have to answer.
And on that note, we will let you decide. Thanks for joining us on this deep dive into the wild world of microcap crypto pivots. Keep digging.
Don't forget to like, share, and subscribe for more.